Good afternoon, friends, and welcome. I'll be sharing live trades and results with you. We'll be evaluating how well these trades work out. We'll be benchmarking this against the S&P 500. I'm expecting to be outperforming it every month. Along the way, I'll also be sharing some lessons I've learned about investments, trading, and building wealth. And of course, the mandatory disclaimer. This is for educational and entertainment purposes only. It should not be interpreted as advice. And with that, let's get into it. Welcome to Trade 15. As you might remember, we had on our prior trade a really nice run right there, and that got us closer to beating the market performance. We took an exit right at this level, and what we're hoping to do is have the price fall and for us to buy back in at a lower price. We're always looking to do that. I'm going to say that it doesn't always work out that way. We tried the same thing over here. We took an exit hoping the price would fall. Price went up here and we went in. So that's not ideal, but we still made some money and outpaced the market, so that's good. But on this one, no matter what, we're going to go ahead and take an entry at this level, and the price is lower than we exited, so I'd call that a really good entry. So that's what happened in this case. We can watch that happen live. Our order is going to go in. It will be filled. And trade number 15 is on. Well, trade number 15 is going to happen very fast. It's kind of happening as fast as this fast-moving water in Yosemite National Park. This is water coming off Vernal Falls. It is moving fast, and so is our trade. Our trade's going to be a one-day trade. So you can see our entry position marked here by the yellow line. And you can see our number of shares in profit. We ended up buying in at a lower price. The next day, boy, the market definitely dipped down here. We were a little concerned about that. But all in all, it ended up at a higher price. And, the big question is, and I would be curious about giving some feedback in the comments, is this a good place to exit? Is it going to continue to run? Is it going to pull back again? We have no idea. This happens to be on a Friday, so it's also over the weekend, which is kind of interesting. But Adam's going to make the executive decision and take an exit. You can watch that happen live. You can see our order going in. It takes a minute, but it's going to get filled, and trade number 15 is over. Let's head over to the tracking sheet and see how we're doing. Well, trade number 15 closed at the very end of May, so May 31st. The S&P 500 was at 527.37. That brings the running total for the year-to-date return at 10.95. That's pretty good. This happened to be a really nice trade because, as you remember, we came in at a lower price. The market had dropped. We came in at a lower price, and we're trading the derivatives. So the market only gained 0.27, but we gained 1.87. So that's a pretty solid trade. That brings our year-to-date total to 12.4%. So far the S&P is turning a pretty good return as of the end of May. We're definitely been chasing it a bit, but at this point we are pulling ahead of the S&P 500. I also want to remind you that these highlighted green bars, they also show us out of all the returns so far for that year, where is the maximums? So if the market dips, these green bars will stay at this point. So I just kind of want to know what the maximum was for this year. I think it's a good sign when our maximums are closer toward the end here, so it shows that we're not sort of made some big gains and then lost them all. We want these green bars to be toward the end of these columns, which they are, so that's a good sign. So we are ahead of the market at this point, 12.4% versus 10.95. We're finally starting to pull ahead. If we look at our key metrics, our percent winning trades is at 73%. That's a little bit higher than expected, but still good. But we are finally seeing our beat the market factor, our custom metric, which basically compares how is our trading doing against the S&P 500. A 1 would be we're matching it. Below 1 would be we're not keeping pace with it, but we're finally pulling ahead. And our goal is to get somewhere close to 1.5. That's our target. Anything more than that is fantastic. Anything above 1 means we should continue to trade. If it's below 1, we should stop trading and just buy and hold the S&P 500. So metrics look pretty good. You can see our 4-year returns on these charts, and they're looking pretty good too. So hopefully on the next trade, we'll continue to pull ahead. But we took an exit. Will the market go up? Hard to say. We'll have to find out on our next trade. That's it for today. How do you think we're doing? Please comment below and let me know how this compares to other investments you've seen. This is for entertainment and educational purposes only and should not be taken or interpreted as advice. Until next time.